Hi everyone, this is Jack, and welcome to our video on investing for beginners. If you're new to the world of investing, it can be intimidating to get started. But with the right approach and a little bit of education, you can become a confident and successful investor. In this video, we'll be sharing 5 tips to help you get started. Tip number 1, set financial goals for yourself. Before you start investing, it's important to have a clear understanding of what you want to achieve. What are your financial goals? Are you saving for retirement, a down payment on a car, a house, or something else? Having clear goals will help you determine the best investment strategy for you. It's important to be specific when setting your goals, as this will help you create a more concrete plan for achieving them. For example, if your goal is to save for retirement, you'll want to consider factors such as your current age, your expected retirement age, and your expected expenses in retirement. This will help you determine how much you need to save each month in order to reach your goal. Tip number 2, educate yourself on the different types of investments available. There are many different options out there, including bonds, stocks, mutual funds, and exchange-traded funds, ETFs. Each has its own set of risks and rewards, so it's important to understand the differences before making a decision. Bonds, for example, tend to be lower risk, but they may not offer the same level of potential return as stocks. On the other hand, stocks can offer the potential for high returns, but they also carry more risk than some other types of investments. It's important to consider your own risk tolerance and financial goals when deciding which types of investments are right for you. Tip number 3, consider working with a financial advisor. If you're new to investing, a financial advisor can provide valuable guidance and help you create a plan that aligns with your goals. Just be sure to do your due diligence and choose an advisor who is registered and has a good track record. A financial advisor can help you understand the different types of investments available and recommend a portfolio that is tailored to your specific financial goals and risk tolerance. Tip number 4, diversify your portfolio. It's important to spread your investments across a variety of different assets to reduce risk. This is known as diversification, and it can help protect you against market downturns. By diversifying your portfolio, you can reduce the impact of any one investment on your overall portfolio. For example, if you have a mix of stocks, bonds, and cash in your portfolio, the performance of one type of investment may not have a significant impact on your overall portfolio. And tip number 5, be patient and stick to your plan. Investing for the long term often involves riding out market ups and downs. It's important to have a long-term perspective and stay the course, rather than making impulsive decisions based on short-term market fluctuations. It's natural to feel a little bit anxious about investing, especially if you're new to it. But with a little bit of patience and a solid plan in place, you can weather any market storms and achieve your financial goals. Remember, investing carries risk, and there is no guarantee of a profit. It's important to carefully consider your options and do your own research before making any investment decisions. With the right approach and a little bit of patience, however, investing can be a powerful tool for achieving your financial goals. Thanks for watching. We hope these tips have been helpful for those of you who are new to investing. Don't forget to subscribe for new contents in near future. This is Jack, I will be seeing you in future. Remember, investing is a long-term process, and it's important to stay informed and stay the course in order to achieve your financial goals. With a little bit of education and the right strategy, you can become a confident and successful investor.